Welcome back. Today we're breaking down 4 stocks and 1 crypto that have been making waves: INKT, Boqii, FTFT, AZI, and OMNI network. I've dug into the numbers and fundamentals to give you a clear, hype-free analysis. We'll look at business models, financial health, and what really matters for investors. The goal? Help you separate smart opportunities from risky speculation. If you value real, actionable insights, hit that like button and subscribe for more. Let's dive right in. First up is Mink Therapeutics, ticker INKT, a clinical-stage biotech focused on off-the-shelf INKT cell therapies for cancer and immune diseases. This company is at the forefront of a new wave in medicine, aiming to revolutionize how we treat some of the toughest illnesses out there. Their big idea? Ready-made cell therapies that could treat a wide range of patients, a huge leap over custom treatments that are expensive and time-consuming. If successful, this approach could make advanced therapies more accessible and affordable for people who need them most. If they succeed and get FDA approval, the market potential is massive. We're talking about a multi-billion-dollar opportunity, with the chance to help thousands, if not millions, of patients worldwide. But here's the catch: Mink has no products on the market yet. Everything depends on clinical trial results, which are notoriously unpredictable in biotech. The entire future of the company hangs on the outcome of these studies. A single trial can make or break the stock overnight. Positive data can send shares soaring, while a setback can trigger a brutal sell-off in minutes. Like most early-stage biotechs, INKT is burning cash fast and isn't profitable. They rely on investor funding to keep the lights on and the research moving forward. Watch their cash reserves closely. Running out means more fundraising and share dilution. Every new round of funding can reduce the value of existing shares, so it's a key risk to monitor. Analyst opinions are split. Some see huge upside if trials succeed, others warn of high failure rates in biotech. The debate is fierce, and the uncertainty is real. The opportunity? A breakthrough could mean explosive returns, especially since they're targeting diseases with big, unmet needs. If Mink's therapies work, they could change the standard of care and reward early investors handsomely. The risk? Clinical failure, regulatory hurdles, and dilution are all real threats. Even promising science can stumble on the long road to approval, and setbacks are common. For most investors, this is a speculative play. Think lottery ticket, not retirement fund. The odds are long, and the stakes are high. If you're interested, do deep research, study their pipeline, upcoming trial data, and keep your position small. Look at management's track record and the competitive landscape too. Personally, I avoid clinical stage biotechs unless I have strong conviction and expertise. The risks are just too high for most portfolios. For high-risk investors, INKT is a classic high-risk, high-reward bet on cutting-edge science. If you thrive on volatility and uncertainty, this could be your kind of play. Just know the odds. Biotech is a field where even promising ideas often fail. The path from lab bench to patient is long, expensive, and full of obstacles. If you invest, treat it as a calculated risk, not a sure thing. Set your expectations accordingly, and be prepared for setbacks. Stay updated on trial milestones and be ready for volatility. News can break at any time, and the stock can swing wildly in response. This is not a set-and-forget stock. You need to actively monitor developments and be ready to act quickly. The bottom line, INKT could soar or crash, and you need to be comfortable with both outcomes. Emotional discipline is key in this kind of investment. Only invest what you can afford to lose. Never risk money you can't live without, especially in speculative biotech. For most, a diversified biotech ETF is a safer way to play the sector. It spreads risk across many companies and reduces the impact of any single failure. But if you want to swing for the fences, INKT is one to watch. Just don't bet the farm. Approach it with eyes wide open and a clear plan. Remember, in biotech, due diligence is everything. Stay cautious, stay informed, and always respect the risks. Let's move on. Next up is Boqii Holding, ticker BQ, a Chinese e-commerce platform focused entirely on pet products and services. Boqii is one of the few public companies in China that's dedicated to serving the needs of pet owners, and it's trying to ride the wave of a rapidly expanding pet economy. They sell everything you can imagine for pets, from food and toys to grooming supplies and accessories, aiming to capture a big slice of China's booming pet economy. The pet market in China is growing at a breakneck pace as more people, especially younger generations, treat pets like family members and spend more on their well-being. Boqii offers a wide range of both international and private label brands, hoping to build customer loyalty and capture higher margins by offering exclusive products you can't find elsewhere. But here's the problem: profitability remains elusive, and the company has struggled to turn a consistent profit despite growing sales. Revenue is up year after year, but costs are rising just as fast, if not faster. Competition is fierce, and expenses for logistics, marketing, and technology keep climbing. They're up against giants like Alibaba and JD.com, who have deep pockets, massive user bases, and the ability to outspend and outscale smaller players like Boqii at every turn. On top of that, regulatory risks and the looming threat of delisting from US exchanges add even more uncertainty for investors, making the stock even riskier. To compete, Boqii spends heavily on marketing and price wars, which eats into margins and makes it even harder to achieve profitability. The bull case? A specialized platform like Boqii could carve out a loyal niche, become the go-to destination for pet lovers, and maybe even get acquired by a larger player looking to expand in the pet sector. The bear case is tough. Persistent losses, brutal competition, and regulatory headwinds could make Boqii a classic value trap, where the stock looks cheap but never delivers. The stock looks cheap on paper, but it's cheap for a reason. Investors are pricing in all these risks. For most investors, the risks here clearly outweigh the potential rewards, especially with so many unknowns. Unless Boqii can prove it can turn a profit, fend off bigger rivals, and navigate regulatory minefields, it's a tough buy to justify. The pet market itself is exciting and full of potential, but Boqii just isn't the best way to play this trend right now. There are simply too many things that need to go right for Boqii, and far too many ways things can go wrong. For now, I'm staying on the sidelines and watching how things play out before making any moves. If you want exposure to the pet sector, look for more established, profitable players with a proven track record. Boqii is a high-risk bet in a crowded, competitive market that's only getting tougher. Watch for signs of a turnaround, but don't hold your breath. For now, let's keep moving and see what's next. Now, let's talk Future Fintech Group, ticker FTFT. The name sounds trendy, but the story is messy. FTFT started as a fruit juice company, then pivoted to fintech and crypto, major red flag. Constant business pivots signal instability and a lack of clear vision. Their operations are scattered: blockchain, e-commerce, crypto mining, financial services, lots of buzzwords, little substance. Financials are weak ongoing losses, heavy dilution, and a shaky balance sheet. They raise money by selling more shares, which hurts existing investors. Most of their growth comes from press releases, not real business results. The stock pops on hype, then drops when reality sets in: red flags, business pivots, losses, dilution, and a confusing structure. This is a classic penny stock that moves on speculation, not fundamentals. The risk of losing your entire investment is extremely high. FTFT is a chameleon company, always chasing the next hot trend. Serious investors should steer clear. There are better, safer ways to get fintech or crypto exposure. For me, FTFT is an easy pass. Don't be fooled by flashy names or hype. Look for companies with a clear mission and real results. FTFT is not one of them. Avoid the lottery ticket mentality. Let's move to the next stock. Fourth is Autozi Internet Technology, ticker AZI, a B2B platform for auto parts in China. They connect manufacturers with repair shops, aiming to digitize a fragmented industry. The market is huge, and streamlining the supply chain is a solid idea. But execution is tough. Competition is fierce, and traditional distributors have deep relationships. Financially, AZI struggles with profitability. Building logistics and tech is expensive. The stock is volatile, partly due to broader concerns about Chinese equities. Bulls see a big opportunity if AZI can scale and become the go-to supplier. Bears point to lack of profits, execution risk, and strong rivals. The business model is plausible, but success depends on flawless execution. For most investors, the risks are high and the path to profitability is unclear. You'd need deep knowledge of the Chinese auto market to invest confidently. It's a step above pure hype stocks, but still speculative. Unless you have an edge, it's best to watch from the sidelines. Look for signs of real traction before considering a position. For now, AZI is a too hard pile for me. Let's wrap up with our final pick. Last up is OMNI Network, ticker OMNI, a crypto project aiming to connect Ethereum's fragmented roll-up ecosystem. In a world where dozens of blockchains and rollups are emerging, each with their own strengths and weaknesses, OMNI is trying to solve one of the biggest pain points: interoperability. Right now, blockchains and rollups don't communicate well. OMNI wants to be the bridge that links these isolated networks, making it possible for assets and data to flow freely between them. If successful, it could unlock huge liquidity and make decentralized apps much more user-friendly. Imagine being able to use your favorite DeFi app or NFT marketplace, no matter which rollup or chain it's built on. OMNI is its own blockchain, secured by restaking ETH, a new approach that borrows security from Ethereum. This means it leverages the trust and robustness of Ethereum but applies it to a new interconnected network. The use case is big. Seamless access across rollups could be game-changing for developers and users. Developers could build apps that work everywhere, and users wouldn't have to worry about which chain they're on. The token just launched, so expect volatility as the market finds its footing. Early price swings are common as investors try to figure out what OMNI is really worth. Bull case: if Ethereum and its rollups keep growing, OMNI could become essential infrastructure. It could be the backbone that ties the entire ecosystem together. The OMNI token would capture value as the network's backbone, potentially benefiting from every transaction and connection made through the platform. Risks: heavy competition from projects like Layer 0 and Wormhole, plus technical and execution challenges. The race to become the main interoperability layer is fierce, and only a few will win. Restaking is new and untested. Bugs or failures could be disastrous. Security is everything in crypto, and one exploit could undermine the whole project. Tokenomics matter. Watch for large unlocks or inflation that could pressure the price. Pay attention to how tokens are distributed and when new supply hits the market. Adoption is key. OMNI needs developers and real usage, not just hype. Without real projects and users, even the best tech can fade away. For investors, this is a high-risk, high-reward bet on Ethereum's future. You're betting not just on OMNI, but on the whole idea of a connected blockchain world. I'd wait for the initial hype to settle and use dollar-cost averaging if interested. This helps manage risk and avoids buying at the top. Keep your position small and monitor progress closely. Stay updated on development milestones and community growth. If the tech works and adoption grows, returns could be huge. Early believers in new infrastructure plays have seen outsized gains before. But if a competitor wins or OMNI stumbles, you could lose it all. The downside is real, and the risks shouldn't be underestimated. This is a speculative play for those who understand the risks. Only invest what you can afford to lose and do your own research. Watch for real-world traction, not just promises. Partnerships, integrations, and actual usage are what matter most. Let's wrap up with a quick recap. OMNI is a bold bet on the future of blockchain connectivity, with big potential and equally big risks. Here's the bottom line. INKT is a high-risk biotech bet. BQ and AZI are risky Chinese plays with profitability issues. FTFT is a clear avoid. And OMNI is a speculative crypto with big potential and big risks. Always do your own research. This isn't financial advice. Use these frameworks to think critically about your investments. Match your choices to your risk tolerance and goals. Thanks for watching. Let me know your thoughts in the comments. Are you investing in any of these? Agree or disagree with my take? Hit like and subscribe for more deep dives. I appreciate your time and support. Stay smart, stay curious. See you in the next video.